my personal opinion, and we're in the midst of a shift right now. Currently, I would still say it's a seller's market. I do think that there's still a pent-up demand for people that want to acquire, want to own, want to buy, want to merge up. But I do believe what we refer to it as jokingly refer to it as the silver tsunami. When is it coming? When's it going to occur? I still don't believe it's here yet. I still don't believe that boomers have made a decision to exit, right? And the ones that don't have a plan, they're almost holding on rather than executing on a plan.
Welcome to the Cloud Accounting Podcast. I'm Blake Oliver.
I'm David Leary.
I'm Curtis Cochran.
And I'm Shannon Hay.
Hey, thanks guys. So we are here. This is a third or fourth interview we've done today. We are at the
Accounting and Finance Show,
LA,
Los Angeles.
I went through all the speakers and panelists. A couple caught my eye, and both of you gentlemen have to do with selling your firm. You each did a talk regarding selling your firm. And then this morning it hit me, Blake has sold a firm. So this will be a great podcast.
Yeah. I knew nothing going into it. I probably should have talked to one of you guys.
Yes, absolutely.
But maybe I'll think, I was smart and I did the right thing, or maybe I'll learn, that I could have done better.
So, Blake, were you 12 when you sold your accounting firm?
I know,
impressive.
Right?
That's impressive.
Well, sorry.
I'm 35, and it was in 2015.
Okay.
So
wow, so recent.
Yeah, it was quick.
Excellent. And Blake retired.
Yeah.
Well, unfortunately,
Went
I
back
didn't
to
make
school.
enough money to do that, but
Retired to the world of podcasts.
that's right. Yeah, this is my my gift to the world,
Excellent.
shall we say? Right, my legacy.
Yeah.
Yes.
Absolutely.
So, So, David,
You want to do introductions? Shannon, you want to start with you?
Sure, wonderful. So I'm Shannon Hay. I work for Live Oak Bank. We are actually the nation's largest SBA lender by volume. All I do all day, every day is finance the acquisition of accounting and tax practices, bookkeeping, payroll, enrolled agents, CPAs, working with a lot of centers of influence, the brokerage world, basically. I don't want to plug names, but there's a large network of brokers that specialize in helping sell accounting firms, and that's really my source of primary business. But then, obviously, we come to trade shows and set up booth and try to find acquisitions that we can get in the middle of.
So I want to buy a firm.
Yes.
I come to you and I say, hey, help me finance this deal so that because I don't have the capital myself to
Correct.
just buy them outright.
That's correct.
So I get the loan.
Yep.
And you underwrite that whole thing.
That's correct.
Okay, got it.
Yeah.
Cool. How about you, Curtis?
My name's Curtis Cochran. I own Cochran Consulting and mergers and acquisitions as well. I started back when I was 8, to be honest with you. Back when I was 8, I worked in the oil field with my dad back in Wyoming, and I was always curious as to what made businesses successful. Is it a mathematical formula? I majored in math when I was a kid, college, and through this process, on the back of my card, you have that in front of you. It's called the 4 E's. Whether you're entering first-time buyer or whether or not you eventually want to exit your business, we have a system. It's 4 E's: entering, enhancing, evaluating, and exiting your business. And for the past 30 years, I've been doing it and loved every minute of it. Yeah,
got it. So I want to sell my firm. I could come to you and you could help me figure out, find a buyer, or are you not?
The very first thing that we do is we would do an evaluation. We want to find out what it's worth. We do everything. Look at the numbers. We look at your people, how many people you have. Is there a correlation there? I mean, we do the whole ball of wax. I kind of call myself a primary business consultant, but actually I took it from the physicians, doing a physical. I do a physical from front door to the back door of the whole business. So that way we know exactly how much your business is really going to come to the market.
How soon should I be having that discussion? Should I be having that 5 years before I plan to sell my firm? Should I be having it 6 months before I plan to sell my firm?
That's a great question. If you open your business today, you have an exit strategy today. You don't wait at all. You do it right now. You want to find out when you want a buyer to come in. When you're tired, you don't want to wait until the last minute and say, okay, I want to sell my business, because there's so many moving parts, there's so many variables in selling your business, as you know, and you have to be aware of all those things.
I've always heard it stated, begin with the ending in mind.
Absolutely. Perfect.
So let's pretend that I am going to start my own firm again. I mean, I do have that entrepreneurial bug in me, right? So I fantasize about it every now and then because I feel like I've done it once. I could do it again, do it the right way, and get more. Do it better every time, right?
Of course.
So, do you have like a top, like one thing or a few things like that I can do to make sure that I do get the most out of my firm when I sell, that I do find that buyer and get the top valuation? Like
when you sell or when you start?
Well,
there's a big difference between
gap in between.
Well, you're telling me that I need to think like about the exit from the beginning.
Correct.
Okay, so like what do I need to be thinking about?
You have to be thinking about, first of all, whatever you're going to start with. If you think you need a $500K, triple that. You want 1.5 million. You have to find, if you think 500, you triple that.
Okay.
That's the first thing. The second thing is you have to build systems that keep you, the owner, away from the house. Away from the business and into your house, your relationships, your family.
Yep.
You even mentioned that on your talk up there about the family and so forth. And that's the big one. The big one is to create the systems that will allow buyers to come in and look and say, hey, this guy has a system. We can buy him out, and the system runs itself. That's what you do from the beginning. The beginning.
So I am not in my business.
Right.
It will function without me.
Absolutely.
Awesome.
Absolutely.
No, that makes sense. One thing we had a discussion around, and I think we've talked about on the podcast before, and it's always hot on Twitter, is this concept of like, hey, if you have just desktop clients, like your clients are not in the cloud, like people will pay you less for your firm. Is this true? Is this something that we're just making up and arguing on Twitter? Do you guys actually see this in numbers of offers? Like your client's less valuable if they're still stuck in the desktop world and they're not migrated to cloud.
I think there's so many variables that come into valuing a firm that that's always the number one question everyone always asks. What's the multiple, right? What is what's my firm worth? It's such a complex answer. There's generalities, right? And you could set a general number and say it's a certain number of times gross revenues, right? But really, it comes down to appeal, right? So if you're in nowhere, Wyoming, your firm's not going to be worth the same as if it was in downtown Los Angeles. If you don't have cloud-based accounting, your firm is going to be worth less than a firm that does have cloud-based accounting. If you have a seasoned staff, that's going to make your firm worth more. If you have systematic approaches, like if you're using modern technology, artificial intelligence or bot keeping or things along those lines, that's going to create more value because it's separating the practice starts to manage itself through those systematic approaches.
Yep.
Talking about getting away from getting away from that, getting to the house. That creates a greater value, obviously a greater appeal, because as a buyer, right, I want something to be as smooth as possible for me, so I don't have to implement those things, right? If they're already implemented, they're in place, that creates great value for me.
So I hear you saying that it does have an impact, but it's part of an overall assessment, right? That you couldn't really say, well, maybe I could put this to you. It's a tough question to ask is, let's say you have two firms, all things being equal, but one has modern technology. They've moved into the latest tech, and the other one is still using 20-year-old tech, right? They're still on-prem desktop systems that don't allow for remote access, that sort of thing. It's like, can you tell me what the penalty is if I didn't move?
Well, I can answer this. No two firms are alike, period. Whether tech or no tech, it's about culture. It's what you bring to the table. You might have somebody that's just tech driven, and they're poor culture. But then you have someone that's not, and they have an excellent culture. People want to come and work for their firm. So two businesses are never alike. And when it comes to an evaluation, it's an art. It's not a science. And as Shannon mentioned, there's just so many variables. There's moving parts to it. That you might have 10 moving parts in one business and only 6 in another. Doesn't make one more valuable than another. It just means that you have more moving parts. it's really fascinating. And that's why I've done this for 30 years, and I'm sure Shannon's been there too. There's just no way to create some kind of a science. I call my own business E4 math philosophy, because it's just a philosophy. There's math in there, but it's a philosophy.
So let's talk about the numbers, because I think a lot of firm owners
care about the numbers.
Care about, like, what is the multiple?
Sure. What is the multiple?
What's the multiple,
what's
right?
the multiple?
Not in this industry. Not the accountants.
Yeah. So, like, these days, what is the range of it? I understand that most firms are valued based on what multiple of gross revenue.
Typically,
right?
yes,
right?
that's correct.
Which is how we did it for mine. So, let's say I've got $1 million firm.
Yep.
Just for simplicity.
Sure.
What is the range of multiples that you're seeing? Like, what's the lowest I might get, and what is the most I might get?
Circumstantial, I would say that the lowest you would get what are the variables that's creating that low quality, that low offering, right? That low price. Usually, it's going to be rural, right? Usually, it's going to be where is the seller at? Are they selling because they're ill? Are they retiring? Are they going to be involved in the transition? What's their engagement post transaction?
Yeah.
And again, I could go on and on and on with all the variables. If I'm going to shoot a number out there, I'm going to say anywhere from 0.8, 0.7, all the way up to 1.3. Right?
That's a pretty big spread.
It's a broad spread.
Yeah.
But for example, Nowhere, Wyoming, again, that probably is going to be less than a 1 multiple, right? Where in San Francisco, for example, you're probably going to get a 1.3, 1.2 multiple, right? Just because the demand. I was going to make the analogy of, what is your home worth, right? Zillow's going to tell you one thing,
right.
Your realtor is going to tell you another, and then the appraisal is going to come along, and they're going to say a third thing. But really, what it comes down to at the end of the day is how much is someone willing to pay for it?
So that's interesting. So it sounds like the market for accounting firms is still very, very local, right?
I want to touch on what you're talking about too, Blake, is, you have a gross revenue of $1 million. Two companies gross $1 million. But what's their annual cash flow? That's a big difference.
Profitability.
Yeah,
absolutely.
Yeah. And that's going to drive the multiple.
One business might have a cash flow of $300K. Another one 100. Well, there's a big difference.
That's huge.
But between what you're doing inside the walls of that business, through your company and your culture and all of that stuff. So the annual cash flow is huge.
Well, and that's going to drive, at the end of the day, that's going to drive deal structure.
Absolutely.
Right? So as a bank, I'm not going to be willing to finance the 100K bottom line, because there's not enough left over the day to service the debt that you're going to take on to buy the business,
right,
as well as pay yourself as an owner. If you were buying a firm, I would want to know as a bank that I'm supporting you in an endeavor that's going to be beneficial to you, right? I don't want to put you in a situation that's going to be a hardship for you, right? So I want to know at the end of the day, the net income is there to support the debt and then support you personally as an owner.
And that is so good, because that's why you call us first. Because then that what buyers are looking for through the years, you're looking for net income.
Yeah.
You're definitely looking for that.
That makes sense.
Yeah, absolutely.
So who's selling firms? Like, is it people that really, the majority is people that want to retire, get out of their firm? Or is it young startups like Blake who grew his firm and sold his firm? Like,
I would say the majority of the sellers I see are retirement's the primary reason, right? A lot of times, though, you're also seeing where it's a change of lifestyle, right? So they're wanting to go from no longer being the manager or firm owner. Maybe they've done some consulting in their practice and they only want to focus on consulting now. Or maybe they really like the audit side of their business and they only want to do audit, so they want to sell everything else that's non-audit. It varies greatly, but I would say the majority are baby boomers looking to retire, making their exit strategy. That's the majority of the sellers.
And then who's buying these firms?
That's a great question, because I don't know if it's the millennials that are buying those firms.
Yeah.
And I'm just saying.
No, I wouldn't argue
we've
that.
got too much student debt.
That's true.
And we're trying to buy houses.
That's right.
Absolutely.
That's right.
Absolutely true. And a lot of it is, another company that's trying to grow their business. That's really who's buying these businesses.
Yeah. My best transaction is an existing firm growing through acquisition.
Absolutely.
Right? Because they have the wherewithal to offset any attrition risk that could happen. There's also a large efficiencies of scale that starts to occur, right? Because you're not going to have generally you're not going to have 2 rent payments. You're going to have 2 software payments. You're going to have these, you're going to minimize. So you're going to take away a certain level of expenses, which increases the bottom line benefit. And so, mergers really honestly tends to be the ideal transaction.
Absolutely.
My most recent gig in public accounting was at Armanino, which is the fastest growing accounting firm in the country.
Yeah.
And it was, and the way that it's growing is a lot through acquisition.
Yeah.
Right. Like rolling up 50-person firms into the 1,000 staff firm that it now is, or it's probably even bigger than it was a few years ago.
Sure.
So when I left.
Well, and you've seen the same with alliances too, like the BDO and the RSMs of the world. They're folding those firms in and creating efficiencies that wouldn't exist otherwise, and bringing benefit to their owners and partners that are involved.
And the big benefit that we saw at Armanino is the ability to sell additional services.
That's right.
To a captive audience.
That's
right. You bring in a small firm that was only doing tax, not even doing audit, a lot of them, right?
Yeah.
And now suddenly you've got consulting, technology, outsourced accounting,
investment advisory,
We had a wealth management division. Yeah. It's like now the whole menu is there.
Right.
And the clients are like.
And I would say that the industry is starting to demand that, right?
Yeah.
Where you're having more of an Amazon mentality, right? Where it's like, I want to be able to one-stop shop everything, right?
Yeah.
I don't want to have to go to 3 different people for 3 different levels of service.
That's the QuickBooks Live.
So
all at once.
All at once. That's right.
Do you guys see the future being more like mid-sized firms and the smaller firms sort of like less small firms, given that trend? Or do you think there'll still be, like, do you see the mix changing at all?
I don't see it here in America. I think that land of the freedom and capitalization. People are starting up businesses left and right still to this day.
Yeah.
It's a little harder maybe, but yet you have some angel investors out there, investment groups that have lots of cash that are willing to put it back into America. You really do.
And I'm starting to see a lot of entrepreneurial spirited individuals that recognize consolidation as a method to wealth building. So you have an individual that might have a small firm that say that's only doing $200,000 a year, and they leverage that equity into another purchase of another book of business that's doing $200,000 a year, and they're duplicating that process over and over and over again, implementing systems, adding technology, managing staff accordingly, and then what started as a $200,000 practice now a $2 million practice going to a $4 million practice.
And if you do it right,
that's right.
You can finance the whole thing out of the current cash flows.
Yes,
that's correct.
Yes.
That's the beautiful
leverage
thing.
Capital.
Yeah.
Leverage capital. Yep.
That's the thing about, like, if you want to start a business in this country, everyone is focusing on those like 10x, 100x like tech startup exits.
Yeah.
And that's a 1 in 100 kind of thing.
Yeah.
But unicorn, isn't that the proper term?
Yeah, right. Yeah. Like there's not a lot of outcomes, and I'm in the tech world now, so I'm very aware of like the probabilities of that, as is David, right? So, but an accounting firm, man, it's almost like you have to try to screw it up.
Right.
If you have like a knack for customer service and you know what you're doing above a certain baseline, there's so much demand for this.
Yes.
Right.
Agreed. Well, and then you couple that with adding additional services, as you're talking about.
Yeah.
Suddenly, you bring wealth management into an accounting firm, or you bring an audit or a consulting side of that business. I mean, it's a game changer.
So, would you say it is a seller's market or a buyer's market these days? If I made you choose,
Get that. If I had to choose one or the other,
yeah,
I'd say a buyer's market.
Ooh.
If I did say one,
Really?
only because you have some baby boomers ready to retire and get out of the market, and that means that there will be a flood of businesses available, which might give you an opportunity for the market to drop a little bit, for the sellers to actually get in. That's
supply
just
and
my
demand,
opinion.
right?
Yeah, supply and demand. It's very simple. I would say buyers, but of course, just like economics, I got other 50% that would disagree with me.
well, and like you said, it's local, right?
Yeah.
It depends on where you are in the country.
Absolutely.
So I think my personal opinion, we're in the midst of a shift right now. Currently, I would still say it's a seller's market, just to not to argue or disagree, but I do think that there's still a pent-up demand for people that want to acquire, want to own, want to buy, want to merge up. But I do believe we refer to it as jokingly refer to it as the silver tsunami. When is it coming? When's it going to occur? I still don't believe it's here yet. I still don't believe that boomers have made a decision to exit, right? And the ones that don't have a plan, they're almost holding on rather than executing on a plan.
Right.
Oh, that's so true.
Well, and that could just delay this for a long time until we run off a cliff, right? Because people aren't selling because they're holding on thinking I can get more.
Yep.
But they're not.
They're not.
Eventually, they're not. And it's just like with a house, right? Eventually, if the market's down, you can't wait any longer. You got to sell. You got to move, right?
Well, and I would say the majority of why a lot of them held on was probably post 08, right? So it's like maybe they were going to sell in 13, but they lost so much in 08 that they're not in a position where they're ready to go yet. So now they're holding on. It's 19, right? And
good point.
Time to make a decision.
And I think those people that are stuck, if you want to call that, they're just kind of stuck. I've talked to younger accountants who think it's cheaper for them to just market at their clients and steal their clients without buying the firm.
We actually have talked with a number of folks like myself who are millennials who started their own firms, and I said, hey, they've never acquired anyone, right? They're not at that point, but they've gotten big, and I said, well, hey, would you think about acquiring some firms from some like retiring CPAs and just integrating that book of business into your practice? And the answer that they give me is, hell no. I'd rather just steal the clients.
Right. Just handpick all steal their clients. Just handpick them.
Well, and it's look at search engine optimization, right? Technology. But then you've got on top of that, now let's couple it with Facebook marketing, LinkedIn, Instagram, all the technology bases that it's basically, in a sense, free advertising, right? If you just hit them in a place where they're not being hit. I'm surprised still at the number of, selling firms that have, weak website presence or even weak web presence to begin with. Like
there's
no website.
There's a stat. I can't remember the number, but there's a shocking number of firms. Actually, just a shocking number of businesses in general in this country
that don't have websites.
That don't even have a website, and that
baby boomers.
Yelp is their website.
Yeah.
I don't know. It's like it would be interesting to see like a demographic survey of that, like
what the age group is of those that don't and those that do.
I feel like we do a lot of like baby boomer bashing, millennial bashing, but I think a lot of this is not as stark as
it's so good to be Gen X. I don't have to just fall right in the middle of all that.
We just ignore you. Like, who is this guy?
Awesome. So what do I do if I kind of have not been thinking about this for 30 years of my career, right? I'm now at some crossroad where I'm thinking of retiring soon. Maybe my firm, I'm only getting that $100,000 of revenue, right? Or
Curtis,
cash flow.
I didn't come to you at the beginning. I'm coming to you closer to the end.
Yeah. What do I do? Like, what's my emergency plan? Is there like hey, do these 3 things and you might be able to turn a corner? Like,
I get that all the time, and by then it's almost too late because your market share's dropped. I mean, revenue, it might have dropped, but the biggest thing is that I talk to anybody that wants to exit is the psychology of it, because they've opened up this business, they've been working 30, 40 years. What am I going to do? And they'll say, "Yeah, I'm going to retire on the beach." Nah, because you've been growing this thing for 30, 40 years. But then when it starts to dip a little bit, you have to get out. They just don't know when to get out if they don't have an exit strategy. If they haven't talked to me or Shannon or anybody that specializes in this kind of thing, they have to think psychologically to exit. And if they haven't spoken with Shannon or like myself or somebody that's in exit planning, they need to immediately.
And I would echo that is you have if you don't have a plan now, seek the advice of a professional. There are a number of wonderful professionals out there that this is all they do all day, every day. And I would encourage you, and even on the banking side, right? I'm more than happy to have that conversation of what's that look like for you? How do you position yourself to be ideal for acquisition or merger? I really think, in again, echoing the growth model, you never want to wait till your revenues are dropping, right? That's it's too late at that point, right? Because then you become unattractive, right? Unfinanceable. Or even, if I'm a buyer, what am I buying? Am I buying something that's dying? I mean, it's not going to make any sense to me as a buyer. I want to look at something and see year over year growth. It doesn't have to be major growth, right? Minimal growth, right? Just some growth and year over year revenue. Right?
Buyers look for not what you did yesterday. They want to know what they can do tomorrow. That's really the essence of it. When they look at it, they say, can I take this company from 2 million revenue to 4 million revenue? Is it possible? So if you're dropping in revenue, it doesn't look good for you. There's no signs. and laws of physics, body in motion stays in motion, and it's as simple as that. So they have to seek expert advice, like you mentioned, Shane.
Early as possible, it sounds like. 'Cause it sounds like if it's too late, that's a heartbreaking conversation.
It is.
For you. I mean,
it's painful. It's a fire sale, and then what do you do? I mean, you tell them that, hey.
Well, and as a lender, it's impossible to tell a seller that their business isn't even a financeable transaction, right? How painful is that? It's like a bank. I'm not even worthy of being what I call a bankable trade.
Right. And they really think it's the bank's fault, or really they really do. They think that no,
they're picking on me, or they just don't like me,
exactly,
or what have you. No,
it's not even the case.
No,
not
at all.
even the case.
No.
So that's interesting because there's tons of blog posts you see out there like how to start a bookkeeping practice in 5 steps. But nobody ever mentions start planning your exit strategy or talk to.
No one ever talks about that.
Not even.
I haven't been doing this for that long, but 10 years is a long time for me to go and really hear very little discussion whatsoever in the small business, small firm space about exit strategy. It's like...
it's like when you're 21. When you're 21 or 22, you get out of college, and now we're going to talk about going to the grave. You're young.
Yeah.
That's not going to happen.
That.
I don't want to hear that.
Yeah.
Exit strategy? What are you talking about?
Right.
It's the same principle. And that's when they should, because then they understand all the variables, all the moving parts coming to the exit, and what a buyer really is looking for. That's the key, is what a buyer's looking for.
And I think one thing that we haven't really talked about is partners, right, or colleagues, right, or who are you mentoring to be your to
succession
be your
planning?
Yeah.
Yes.
Yeah. I mean,
I read
we're really
a lot
talking
about the lack of it.
There's and maybe some a lot of the excuses are, well, the talent doesn't exist. Well, I think that's more of you're looking out the window and not in the mirror kind of factor. It's like, are you judging that, or is that a truth, right? But again, even if that's not the case, there's still a whole acquisition market out there that's biting to take advantage of, and give you a good value for your firm as long as it's in the right position.
And those that are listening to this podcast, Wall Street Journal probably about 2 or 3 years ago mentioned that less than 25% of all companies, major players too, have an exit strategy. So don't be alarmed.
Beat yourself up.
And beat yourself up.
Yeah.
Because even your major players, they don't think of exits. They're trying to grow the business. They're not thinking about buyers and even partners. They're just thinking about growing the business. So don't beat yourself up if you don't have an exit strategy. But I would actually seek one ASAP.
That's right.
Is there anything else you guys would like to discuss before I wrap things up? Anything I missed? This was great.
Again, I just encourage everyone to seek advice, seek the help of experts. They're out there. We're willing to help. I know Curtis is. I'm willing to help. I don't know if you're going to give our contact information, but more than happy to take a phone call, take an email, schedule some time, talk about what that looks like, whether you're a seller or whether you're a buyer. Interested on both sides of the coin.
The education part, Blake, that's what we're here for. I mean, free consultation. It's not going to cost you a dime to talk to us about these things, just like this podcast. It's excellent.
So speaking of your contact information, Curtis, what's the best way for people who are interested in your services? And you could remind us again what what your specialty is here. What do you do? How can people reach you if they're interested in talking to you?
Well, again, I specialize in the 4 E's, which is, it doesn't matter if you're entering or whether you're going to exit. You can call me, email me. The best contact is Cochran, my last name, consulting @yahoo.com. And you can email me, and then I can give you a call, and we can have a free consultation over the phone, wherever you're at.
And we'll have that your contact information in the show notes. And how about you, Shannon?
So again, all I do all day, every day is finance the acquisition of accounting firms. So if you're on either side of that transaction, I'm more than happy to have a conversation. Best way to reach me is via email, shannon.hay, Hay, @liveoak.bank. And then you can always reach me on my cell is 614-648-9199. But email first, and then we can set up a time to talk.
And do you finance acquisitions all over the country, or is
I do, all 50 states.
All right.
Yep.
Great. And as always, you can reach me on Twitter. I am @BlakeTOliver. And how about you, David?
And I'm @David Leary.
I forgot my Twitter.
Oh yeah, well tell us.
Yeah, it's Shannon Hay LOB.
Shannon Hay LOB.
Yep.
All right. Well, I'm gonna follow you on Twitter.
Thanks. Likewise.
thank you guys both so much. Thank you, Curtis. Thank you, Shannon.
Appreciate it. Thank you.
Thanks.
I'm thinking about selling my firm.
We gotta build one
I'm going
first.
to build it
Yeah,
first.
build one.
But I know what that first step is to think about selling the firm.
There you go.
There we go.